Today we are joined by Ronald Slabke, CEO of Hypoport SE, for a deep dive into one of the most important strategic questions facing digital financial platforms today. How could artificial intelligence affect Hypoport's business model? To make this discussion easier to follow, we have divided the presentation into three focused videos. This is part one of three. In this first segment, Ronald outlines where AI could potentially affect the German mortgage market across product supply, mortgage marketplaces, and distribution. Ronald, thank you for joining us today. The stage is yours.
Yeah, thanks for the question. And let's talk about AI and Hypoport. When we talk about Hypoport, we will focus a little bit on the real estate and mortgage markets, our core business, and the value chain of home ownership and financing home ownership here in Germany. You may be aware of this. We are operating along the value chain with different business models. The core is the Europace platform, where everything comes together, and the white label versions of it with Europace and Finmas for cooperative and savings banks. But there are multiple business models as well in front of the platform to support the business in the platform and to reach out along the value chain at the different customer cycles and have a touch point to everyone in the market who would like to acquire property or finance a property. And in the end, 30% of the German mortgage business goes through our platform, so a major part already. And when you look on this, ask the question, how is AI impacting this value chain? You fast get aware of this, that's a complex question. So let's try to slice it down a little bit and look on the different steps of the value chain and what AI may do or may not do. Let's start in the back with the product suppliers. In general, in Germany, we have roughly 1,000 banks who are operating in the mortgage business. The 800 most relevant ones are on the Europace platform with their products. From an AI perspective, to replicate the bank, create an AI-first approach for a mortgage bank, so to have a much smarter way to operate a bank based on an algorithm than a traditional bank is run, is a feasible approach, I would say. The challenge, especially in the German market, to enter there and to get the major market shares, beside the fact that everything is regulated, savings and cooperative banks have a pretty low need for return on equity. Even with less than 10% return on equity, they are happy because they have other goals to follow. And their focus is more on a regional perspective or with the cooperative banks who enable their members to do financial decisions with them. And let's say for mortgages, equity costs are a major topic. And this already in the past 50 years, you can say, limited the chance of private banks, international banks, to enter the German mortgage market. So that you can say for a long time, private banks or international banks just could be successful in these markets or had a long way to go to acquire market share. With an AI-first approach, I would say you have to take the same challenge because this unique economics doesn't change. It's not a very well invested equity when you fund German mortgages. So to disrupt there, with any idea of how you will create the distribution is a tough challenge to go. And from my perspective, the only realistic option is to find niche markets there and enter them. And in this moment, when you try to focus on the niche market in this quite complex mortgage world, then Europace is the best way for you to address this niche, because as you heard already, 1/3 of the German distribution is on this marketplace already. If you try to enter from this perspective, using AI and addressing certain needs to integrate in Europace, it's the perfect approach. If you would choose to disrupt the whole market from the back to the front, so as well disrupt distribution, you face additional challenges in the competition on every step in the value chain. And when we talk about the different layers in a second, you will see that competing on all these layers, even with AI, creates a tough job to do. So that's why I would say niche player and very efficient run banking book and then banking operation based on AI, good idea, but then you need to connect with Europace to be successful. So let's come to the next one. So disrupt Europace directly. So the idea to bring an AI-powered marketplace to the market where distribution and the offering of the market, the product supply, is matched in a new way, new developed out the 24 years of experience we have by now in developing Europace. Technically, you can say this may be an idea because developing something massively changed thanks to AI. And why not developing a marketplace? So the challenge is not on the technological side, not on the software development side. The challenge comes from both sides of the market which you want to integrate. First, what is your offering for the distribution? Because the distribution here in Germany expects you to enable them to access the whole offering of this 1,000 banks, or minimum a significant set of this. So as long as you can't provide this, you are useless for the distribution side. To get this, you need information of banks, what they are willing to underwrite. What kind of mortgages exactly. And here comes the stronghold of Europace. We are the only digital copy of the mortgage application, the mortgage criteria, the willingness of lenders to underwrite something. So you can't get the digital information from a bank what they are willing to underwrite in Germany. There are just a few banks who have their own digital copy, what they do and what they don't do in the mortgage business. We are the core implementation, and for most of the bank, the only one. This makes it challenging for an AI to replicate this knowledge, because we are the single point of source for this information. To get this information out of banks, it would be an whatever approach you choose, a long path for training your algorithm by the banks without doing business and without having a solution for the distribution side. And without this, to convince banks to even invest in training your algorithm, I would say it's an interesting challenge to go. Yeah, because what is the benefit for the bank training your algorithm? So you give it them for free later, so that they are able to directly interact with distribution without you. Let's say from our perspective, we didn't find a way how to convince banks without the flow of business which we operate already to help you train your models. And we will talk in a moment about this, how Europace uses this flow of information to train our own models already, and how everyone benefits from this. And as a new entrance with a direct approach to compete with our marketplace, you will have to solve this chicken and the egg problem, that you don't have the distribution to be attractive for the supply side and vice versa. So our next approach of AI can be to disrupt distribution. So how mortgages are in the end, how the first contact happens, how consumers find an advisor or advice. Maybe they don't need an advisor anymore. Let's say a generative AI in some moment will be able to advise a client, and specialized AI may be today already able to advise a client pretty well, better than the average advisor out there. So how about creating a distribution approach where you digitalize the advice, which is today a very human-based process here in Germany. So in general, I would say it's possible to do this. With all what we know today, AI is able to replace this what an human advisor is providing for the consumer on the perspective of information and, let's say, qualified advice what to do. The challenge is that for German consumers, getting a mortgage is a once-in-a-lifetime experience, usually. Sometimes, or let's say, regularly they refinance later, but it's a slightly different business. Initial point where a mortgage is created is a once-in-a-lifetime moment for most of the consumers here. And in this moment, this is for them the biggest commercial decision they do in their life. With all the trust that models build right now already, and consumers get used to it, that an AI is a great advisor, and let's say your well-being with your most important financial decisions in the hand of an AI is a step to go for German consumers. So I would say there will be consumers who are willing to do this, especially ones which did it already, or which are financially very educated and confident about this, what they do. But it's not the majority in this process. A lot of consumers will need something that creates the trust that they're doing the right thing here right now. And to build this trust for an AI system will be a challenge for the German consumer. Or let's say we are talking about a more far distance. And here we try to focus a little bit on the next 5 years, I would say. And to build this in the next 5 years, it's a tough challenge. So it will be there. So we will see automated advice based on AI. It stays a niche. So when it's a niche, then how you select during this, let's say with your marketing approach, which consumer to bring how far. And there comes the challenge to disrupt the distribution here. When for most of the consumers, you still need a human advisor, then disrupting based on an AI model gets a challenge again. Yeah, you can cooperate with a human advice network, something like Dr. Klein, who is the biggest franchise brand in Germany and under which 600 advisors operates, which are highly specialized in mortgages. You're able to cooperate in the moment of switch between the brand, or between the AI model and Dr. Klein franchisee. You create as well a friction, which is harming your conversion rate. And let's say the existing distributors are well aware of what's going on and are able to attract consumers with an AI-based approach as well. And they have the huge advantage that without any frictions, they are able to convert all consumers. The ones who are willing to transact with a pure AI, just with the brand, you can say, and the ones who need the human support. And with this, they have you can say, unfair advantages in attracting clients. Yeah, because their conversion rate is higher and so their revenue per unit is higher. So as well, I would say a challenge because of the consumer, the special structure of the market, that consumers and mortgages are for them such a major issue and such a seldom executed transaction. And the way to build this trust for a majority of the consumers with AI is long. So this said, back to the beginning, to disrupt the whole value chain. So distribution, marketplace, and product supply is a very tough challenge. And if I would look on this, where to enter with an AI approach in the value chain, I would focus on product supply for niches and integrate with Europace to get the reach. Beside this, and we are aware of this all, that AI is changing the world, how consumers are interacting with their surrounding. With the generative AI, with agents, and as well as specialized offerings, there will come a layer of AI which focuses on the interface between consumers and distribution. You can say in a certain way, replacing the role of Google and as well social media and educating consumers much farther than today's offerings in this environment. But beside this, that they are creating a layer and an access point for the distribution side, it's not a replacement of the advice which in the end is needed and the trust that you need and the holding hand to sign a mortgage contract at the end. And actually, it's as well a legal topic that this advice is regulated. You need a license for this. You have liabilities for this. So if a generative AI, a slightly specialized one, wants to take this risk, I have there some doubts.
Thank you, Ronald, for this insightful first part of our three-part Hypoport AI deep dive. The key takeaway from part one is that while artificial intelligence may influence several parts of the German mortgage ecosystem, broad disruption across the full value chain remains difficult due to regulation, market complexity, and the continued importance of trust in mortgage advice. In part 2 of 3, we will turn to Europace and examine why Hypoport believes its platform may be particularly difficult to disrupt in the AI era. Investors can find the full 3-part Hypoport AI deep dive, as well as additional video presentations from Hypoport on the Seat 11A platform. Thank you for watching on Seat 11A.
Disclaimer. As described in the legal section on our website, seat11a.com, this publication is for informational purposes only. This means it is not intended to provide you with any investment advice. Any opinion or recommendation expressed by the companies is neither given nor supported by us and should not be considered investment advice from our side. Also, remember that any opinion or recommendation expressed is subject to change without further notice. The content is obtained from sources believed to be reliable, but we do not guarantee its accuracy, completeness, or timeliness. Seat11a.com and its employees disclaim all liability for any loss that may arise in any form from any use of the information in the video, audio, and on our website. We neither express any opinion on the future value of any security or other investment vehicle, nor recommend any investment based on the information provided. Please consider the publications and our website as a platform for companies to present themselves. You need to seek financial advice from an expert regarding the accuracy and appropriateness of the material presented or recommended by the companies in the publication. As we are just considered a publisher, we may hold and trade securities in the presenting company, whether it is a listed or private company. By consuming our content, you agree to these terms and the terms in our legal section on our website.